Hello everyone, this is Talk About FATCA with KPMG. My name is Doug Harrell. I'm a U.S. tax partner in our Cayman Islands office, but we work very closely with our KPMG office here in the BVI. And they, in conjunction with the GIS, had invited me over to speak to you about your U.S. tax filing requirements if you are a U.S. citizen or a green card holder. One myth I'd like to dispel right up front is that FATCA itself did not cause you to have to file a U.S. tax return and report your worldwide income. FATCA is a tool that the IRS and Congress in the U.S. has developed to help them discover or find people that are not filing their U.S. taxes properly or reporting all their worldwide income. So let's step back a second and talk about your U.S. filing requirements. If you're a U.S. citizen, passport holder, or U.S. green card holder, you're required on an annual basis to file a U.S. income tax return and report your worldwide income. You're also required, if your balances in your non-U.S. bank accounts aggregated together with your securities accounts and your non-U.S. pension accounts exceed U.S. $10,000 during the year, you're also required to file a report referred to as FBAR, or the Foreign Bank Account Report, and that's due on an annual basis as well. So what do you do if you've not filed? Say it's been a number of years and you've not filed these forms and you were required to file them. There are a few options for you. One is to keep doing what you're doing and not file, but we do not recommend that you do that. Another option would be to start filing, say, for the 2013 calendar year, because U.S. taxes are reported on a calendar year, and go forward and hope the past never rears its ugly head from a tax perspective. Then there are two programs that the IRS has available currently that I want to talk to you a little bit about. One is for lower income tax earners, or income earners, excuse me, that have a lower amount of income tax that might be due. That's called the streamlined filing process. The streamlined filing process is available to anyone, any U.S. citizen or green card holder that's been living outside the United States since January 1, 2009, has not filed tax returns in that period, has not received any IRS notices regarding their returns during this period, and if they filed their returns, they would owe less than $1,500 in tax each of those years, each of those 3 years. If you fall into that category, then you can file three income tax returns plus 6 years of FBARs for any year they might have been required, and follow the procedures that you can find on the IRS website on how to file those returns. And the IRS has promised that they will not go back to any past years, and you will not be assessed any penalties, and then you're back in, or you're into the tax system and the filing system, and you should file on a go-forward basis. I think at this time we should stop and talk a little bit about how you calculate your taxable income for U.S. tax purposes when you're not living in the U.S. As we've already stated, you must file a return and report your worldwide income. However, there are a couple of exclusions available to U.S. citizens and green card holders living outside the United States that are not available to people living in America. The first of those is referred to as the foreign earned income exclusion. Foreign earned income exclusion is an exclusion against earned income earned while living and working in a non-U.S. country or territory. That amount is increased for inflation each year. For 2013, it's around $97,000. So you have an exclusion against your wages, earned income, wages, of about $97,000. So if your wages are less than that amount, and you have no other income or minimal other income, there's a good chance you will owe no income tax when you file your tax return. Now, if you're making above the foreign earned income exclusion and need additional deductions, you can also get a further exclusion for foreign housing costs. Those costs include rent, homeowners insurance, electricity, water. It does not include things like pool maintenance, telephone, or cable TV. However, if you have these types of housing expenses that are allowed and you're above the foreign earned income exclusion, you aggregate those expenses, and if they exceed a floor amount, which is currently around $15,000, you can increase the amount of the deduction or exclusion you can take against your earned income. So with those two exclusions in mind and other deductions that might be available to you, just keep in mind you can earn in wages somewhere between generally $100,000 and $110,000 and very likely not be subject to any income tax or very little income tax. But you are still required to file a U.S. tax return in order to take advantage of these exclusions. Now let's talk about the other program that the IRS has currently available for people making in the higher income tax brackets. It's called the Offshore Voluntary Disclosure Initiative, or commonly referred to as OVDI. And in that initiative, you must agree to go back until 2004, so 8 years of tax returns and 8 years of the FBARs, and provide those to the IRS along with any other types of returns that might be required to be filed during that period. And the IRS has stated that they will give you relief from certain penalties. However, they will not give you relief from all penalties. All tax must be paid with any interest due on those unpaid tax balances. And there is a 20% underpayment penalty based on the total tax that's due. There is an additional penalty of up to 27.5% of the highest balance reported on your FBAR for any of those years. So you can see there's still a price to be paid. But what happens if you come into this program, you might not have been filing for, let's say, 20, 30 years. If your fact pattern fits what the IRS is looking for, you're only having to file and pay for 8 years, and those previous years just drop off the table and you're cleared on a go-forward basis, which can be a good deal. It depends on your personal situation, should be evaluated on an individual basis. Now we're going to move into another segment where we're going to have someone present to me various scenarios and frequently asked questions to which I'll provide answers to.
I am a U.S. citizen, but my parents are Virgin Islanders. They have died, and now I am to inherit some property in the BVI. Will this be taxed?
The short answer is no, it should not be. When the way the U.S. estate tax works, it is levied on the person that owns the assets. So as long as the person that's dying and leaving the assets, and the assets are non-U.S. assets, and even though the recipient is a U.S. person, there will be no U.S. estate tax or any form of income tax assessed on the receipt of that property. Now, if that property is earning income after it's received by the U.S. persons, that would go into the calculation of their worldwide income on a go-forward basis.
What does exclusion mean? That when I file, I will pay no taxes?
It depends. As I mentioned just a little earlier, you have the foreign earned income exclusion, and you can also, if needed, take the foreign housing exclusion. If your earned income, your wages, once calculated, and you calculate these exclusions, and you exclude up to those amounts from income, if you have no other income and your wages are totally excluded by these exclusions, then you still have to file a tax return, but you would come down to a zero tax liability. Another point I'd like to make at this time is, if your tax liability turns out to be zero, there will be no penalties or interest, because penalties or interest on an income tax return are calculated based on the tax liability.
I am a U.S. citizen, but my spouse is not. We have a joint bank account. What will this mean for my spouse?
The non-U.S. person is not subjected to any sort of U.S. income tax payments or reporting just because they are married to a U.S. person. If you have a joint account, the U.S. person would have to evaluate that account, the total balance in that account, even though it's owned jointly with their non-U.S. spouse, to determine if they exceed the $10,000 reporting requirement for the FBAR. And if there's interest earned on that account, 50% of that interest, one half of that interest, would be reported on the U.S. person's U.S. tax return. But the non-U.S. person would have no filing requirements to the U.S. and have no taxable income to report to the U.S.
I want to start filing as I have a green card and I reside in the Virgin Islands. I'm a fairly middle-class citizen. I have never made more than $40,000 a year. I have not resided in the U.S. for any period of time longer than a week. I have no U.S. bank account, but I do have a post office box in the U.S. Virgin Islands. Do I qualify to be excluded from taxation?
Well, based on the facts that you stated, once you file your tax return and report your wages of the $30,000, which is well below the foreign earned income exclusion, you should be able to exclude all those wages, and that would come down to zero. The fact that you have a P.O. box to facilitate delivery of mail, and that P.O. box being in the USVI, should not cause you any undue tax situation. It shouldn't taint the fact that you are a bona fide resident. You should be considered a bona fide resident of the BVI.
At what age do you stop filing? At what age do you start?
You start filing when you have taxable income above the allowed amounts. Generally, that's above the age of 14. Children under the age of 14, even if they have income, that income can be and generally is reported on their parents' income tax return, designated that it's earned in the name of the child who's under the age of 14. So the tax is being paid, but it's done with the parents' return. Once the child is above the age of 14, if they make above the minimum amounts where a tax return is required, then they file their own tax return. Now on the stopping side, if you have earnings up until your date of death, if you have taxable income that requires a return to be filed, you file a return until the day, well, you don't file it the day you die, but your executor of your estate would actually file a return in the year that you actually pass away. So taxes go with you all the way to the grave.
I am a U.S. citizen, and I think that I meet the requirements necessary for exclusion. I know that I have a tax home, and I know that I should pass the bona fide residence test. Do I still need to file?
If you have earnings in excess of those minimum filing requirements, in order to demonstrate to the Internal Revenue Service that you qualify for the foreign earned income exclusion and or the housing exclusion, you must file a return to take advantage of those exclusions. You can't just take the position, I'm making below the exclusion, I don't have to file. You need to file the return to demonstrate the facts that show that you are eligible for the exclusions.
I am one of the parents of a child with U.S. citizenship. I reside in the U.S., and the child and other parent reside in the BVI. Who takes the exemption for this child?
Well, an exemption, personal exemption, which is now around $3,900, which is an actual deduction from taxable income that you get for yourself and any of your minor children dependents or children in school up to the age of 24 if you're providing at least half of their support. Only one spouse or one parent can take that exemption, both cannot. That's generally debated and decided between the two adults. It should be the one that's providing more than half of the support, but many times, depending on the tax situation of the two individuals that are filing the returns, they'll make a decision on who will take that exemption, but do not take it more than once.
When it comes to expenses, is rent included? Do you get a home office expense?
Okay, I'm thinking you mean there is rent included in expenses towards the foreign housing exclusion. And yes, it is. Rent is one of the allowed housing expenses to count towards that exclusion amount. Now, home office expense wouldn't come into that category, but home office expenses are deductible whether you live in the U.S. or outside the U.S. It's under the general tax rules and a deductible expense if you are using a portion of your home as an office to generate business income.
My children were both born in U.S. territory. However, I am not a U.S. citizen. Is there anything I have to do?
Not really. I mean, when the children, as we talked earlier about, when children start having income, generally above the age of 14, but it could be at a younger age, especially if the parent is not having to file a tax return. If that child has taxable income through, generally at a young age, through investments they might hold, they probably are not working or haven't earned income, then you have to consider whether or not they have income that needs to be reported to the U.S.
When will FATCA be implemented?
FATCA itself has been pushed back a few times. FATCA will be implemented mid-2014 is the current date, that the foreign financial institutions will have to start collecting data and reporting to the Internal Revenue Service their U.S. customers. One point I would like to make in closing that I didn't forget in my earlier presentation, if you need to file tax returns, you've never filed, and you do not have a Social Security number, the very first step is you need to get a Social Security number. You cannot file a tax return without a Social Security number, and that's a very important point I wanted to make sure I got in there. Now refer to my notes here, please. Today's talk about FATCA has been brought to you by the GIS. Again, I'd like to remind you that my name is Doug Harrell. I'm with KPMG based in the Cayman Islands and work very closely with our BVI practice here. Remember to stay informed on your U.S. tax filing requirements and the impact of FATCA as it comes about in mid-next year. You can get more information on your filing requirements and the various IRS programs that I talked about at www.irs.gov. And you can also get more information at www.bvi.gov.vg. I want to thank you for watching.